Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me are Samira Abdi and Pavitra Parekh. And season's greetings to all our viewers from the entire team of Trading Hour.
Oh, absolutely. It's Dhanteras, it's Diwali in a few days. So here's wishing that all of our viewers have the most wonderful year and all of the health and prosperity to them and to you guys as well.
Yes, all the best, and I wish all of that and more for Diwali and for New Year. I hope it's all that and more for everybody who's watching.
Okay, and the markets are going great, right? We're up close to about 0.4%. No complaints this week. Week to date, the Nifty's rallied close to about 2.5%. The mid-caps have moved up close to about 1.5%. And banks have been the rank outperformers. So week to date, the Nifty banking index is up close to about 3.5% today for the week, sorry. And Axis Bank, fueled by this massive 6% up move that you can see today, this week, Axis Bank has rallied close to about 9.5%. PSU banks have been on fire. State Bank of India up 6.5% for this week. Apart from that, a couple of the other big movers include that in the FMCG pack. So Nestle has had a solid run, both Nestle and ITC. ITC, of course, on the back of numbers. But this week, Nestle, ITC, both of them rallying about 5 to 6%. And Reliance Industries, the big boy, has also been partying ahead of Diwali. Reliance Industries has clocked in a gain of 5.5%. The rates that I'm talking about, of course, are the week-to-date ones. But today, of course, it's pretty much a green screen, you know, and even a little bit of green, everyone's happy.
Oh, absolutely. It is a green screen. It looks good. And, you know, this is a good time to reflect on the past 1 year, right? So let's pull up what's happened in the past 1 year for our own markets as well as for some of the global markets. We have been talking about this outperformance across the board. So for the Nifty, it's down around 3%. And then you'll see the rates for the rest of the markets. Those will come up. And you can see the kind of outperformance that you've seen in our own markets. So the Dow is down 15%. S&P is down almost 20%. Something like a Hang Seng is down around 38%. So that is the kind of setup that we have been in, and we have shown good resilience. So hopefully that continues into this year as well. It is the PSU banks which have really been on fire. Of course, Reema just mentioned what's happened this week. But if you take a look at the past year as well, it's up 30%. So that has been the best performing sector. So do keep your eye out on that. In terms of what's happening today, a lot of those banking names will once again come up for you. And in addition to the larger names, you have a lot of earnings reactions coming in. So something like a Canara, Union Bank, all of these are looking good. So keep those on your radar as well. On the downside, few of the tech names have found their way over there. So the likes of Tech Mahindra, TCS are seeing some red, and also the likes of Bajaj Finance and Bajaj Finserv. But those are just a few names. So Mera, all in all, festive cheer on the street.
Absolutely. So let's get started. We have a lot that we have lined up for you over the next 1 hour. Stocks hold firm with gainers far outstripping the losers today. Financials are the big winners, while metals and IT continue to drag.
It's earnings galore on our show today, so we will be joined by the managements of KEI Industries, Nazara Tech, Happiest Minds, as well as Symphony to discuss their quarterly numbers and the way forward.
In key earnings to track, we'll bring you expectations from big boy Reliance ahead of their quarterly numbers today. All of this and much more lined up over the next 60 minutes.
But first up, let's talk about Vodafone Idea. Remember, there is a board meeting which is scheduled today, and in the board meeting, the company had said that they will consider issuing convertible debentures to a vendor. Now, Vodafone Idea has multiple vendors. Industars, we know, because they have, pretty much up the ante when it comes to putting pressure on Vodafone Idea for them to repay their dues. But they also have others like Ericsson, Nokia, ATC, that's American tower company. It's a tower company like Industars. So all these are vendors of, Vodafone Idea. So over the last 2 days, we were trying to find out which is that vendor Vodafone Idea will be issuing that convertible debentures to. And what we learned from our sources, that it could be ATC. Now, Vodafone Idea has dues to many of the vendors, right? All of them. To ATC, we understand from industry sources that the dues could be in the range of 2,000 to 2,500 crore. We reached out to the company to find out whether that number is accurate, but this is the number that we learned from our sources. Looks like the issuance of convertible debentures could be done to ATC. That's what sources have indicated to CNBC-TV18. We've written to the company, but we're awaiting a response from them. So watch out for Vodafone Idea. There is a board meeting today. With that, they will raise that a little bit of money, which will go, they'll raise that money from a vendor to be repaid to the vendor.
All right, so that's the quick update on Vodafone Idea. But let's quickly invite our first corporate on the show as well. KEI Industries is in focus after their Q2 earnings. So they saw good revenue growth of around 19%. But it is the margins which came under a little bit of pressure because we have been talking about the higher raw material costs as well. So let's get a check on where things stand right now as well as the outlook going forward. Anil Gupta, Chairman and Managing Director of KEI Industries, joins us in the show now. Mr. Gupta, good morning. Thank you very much for joining us. And first off, season's greetings to you from the entire team here at CNBC-TV18. And you know, on your numbers, I want to ask you, let's actually begin with the margins itself. You have seen a slight contraction because I can see that raw material costs have gone up. So can you tell us where things stand on the, on the raw material costs? Have you seen the worst of it already? And where can the margins go from here?
See, the margins are slightly contracted. Last year it was 11%. It has come down to 10.3%. It is mainly because of some, there is a 20 to 25% correction in the raw material prices. That means to the reduction side. And we, in the retail business, we are holding a lot of inventories in our factories and depots for just-in-time delivery. So a small impact has come due to that, although we are taking care of our inventories versus order book significantly. So in last 2 years, we have not been impacted due to the raw material input prices increase. But in the retail business, as we have grown the retail business to the extent of 47% of our sales this quarter, so a small impact has come. And you know that due to the increase in the transportation and shipping costs, that has, and the orders which were booked a year back. So some impact has come due to that.
So, sir, the margins will stay around the 10-11% mark, or can we see better than that going forward?
We will guide the margins in the range of 10.5 to 11%. Definitely, we will be able to maintain it to the level of 11% in a few quarters.
Okay, so 10.5 to 11% is the EBITDA margin guidance for this year. Mr. Gupta, morning. Reema here, and happy Diwali to you, everyone at KEI, your family and the company. Can you talk a bit about the growth? What's the industry growing at? What is your growth estimated to be on the B2B side as well as on the retail side? If you could provide some color and numbers, more importantly.
In the B2B side, we have grown in this quarter around 10%. Although on 6-month period, we have grown by around 20% in the B2B business. So far as B2C business is concerned, in this quarter, we have grown by 31%. But overall, in last 6 months, we have grown by 40%. Overall, for the whole year, we expect a growth of 17 to 18% in our top line. And a EBITDA of anywhere between 10.5 to 11% in that range. I see a good demand outlook for our products, not only in India, but as well as our export markets. And we expect that we should be able to grow by 17 to 18% in next 4 to 5 years on a CAGR basis.
Hi, Mr. Gupta. Morning and festive greetings to you and all of your colleagues. Since demand is strong, I wanted to check if there is, space to pass on any price hikes, given that raw material costs have also gone up a bit. Is that something you're considering?
See, this is a competitive industry. We always try to improve our margins by 1 to 2% when we are bidding. And since now the input cost regime is stable, we definitely can expect the margins in the upper range that what I am guiding to the level of 11%. We will definitely try to push it further as we are doing a lot of branding activity and try to, develop the brand and penetration in the, rural markets and smaller markets. So hopefully, but it will take a bit of time, maybe 1 to 2 years to improve the margins further.
Okay. Sir, could you take us through what your order book looks like currently and what is the split between the different divisions?
Presently, our order book is approximately 33,500 crore. And out of which around 1,500 crore is the order from the cable business and 12 to 1,300 crore from EPC and 400 crore from extra high voltage cable side. So far as retail orders are concerned, that we never consider in our order book because those orders comes and executed from the stocks within a week's time.
What's the inventory situation like with the dealers on the B2C side?
I don't know about the inventories with the dealers, but dealers are definitely not keeping much of the stock. We are ourselves keeping significant stocks in our 26 depots, which are maintained all over the country. And the level of inventories are there between 200 to 250 crores all the time.
Okay. And what is the capacity utilization, sir, you're operating at now?
We are having a capacity utilization of around 75% at the moment. And I'm hopeful that by this year end, we should be able to reach to the level of around 82 to 85%.
Hi, welcome back. You're watching Trading Hour. The focus now shifts to the commodity space. Manisha is with us. Hi, Manisha. Morning. It's Dhanteras. So should I guess if it's gold on your radar or something else?
Well, I'm looking at overall commodities, Sumera. It also is the last day of this Samvat. So I'm looking at what the commodity prices have actually done in last 1 year itself. And I'm starting with the energy prices that we saw headlines being created onto this one because of the Russia and Ukraine war. And we did see all-time highs in a couple of them as well. But take a look at the crude oil prices and it has come off its highs of this current year. And the last 1 year is now closing with nearly 2 to 8% of gains for both the crude varieties. The strength, though, has continued for the crude petroleum products. Take a look at the heating oil prices, up by 48% in last 1 year. And coal clearly continues to be in the news. 71% of gains in last 1 year for this one as well. This is the most interesting chart. When you look at the international gold prices, we have seen a decline of 9% there. But take a look at the Indian gold prices. And because of the rupee depreciation, you are looking at 4% of gains onto this one. Silver has continued to decline, but less than what we've seen in the international markets. And platinum, palladium as well continue to be in the negative there. The industrial commodity prices also have had their share of news and volatility in this year. We did see all-time highs in copper and aluminum in this year, but from the highs, we're down between 30 to 35%. And when you look at the last 1 year, we are down by 24, 23% in copper, aluminum, 13% in case of zinc. Actually, in all of these metals, the only one standing tall and positive is nickel with 10% of gains. Otherwise, the ferrous metals like steel and iron ore also are trading in the negative in last 1 year. The agriculture commodities pretty much show a similar picture there. Here as well, the street is quite divided. When you look at the kind of commodities where you are looking at lower production or which have a direct indication or impact from Russia and Ukraine, those commodities have done well. So you have rice up 22%, corn 27%, and then soybean and wheat prices also trading in the positive. And that is where the chart in positive ends. Everything else actually is trading in the negative, whether it's palm oil, coffee, sugar. We've seen declines onto this one and big cuts really coming in for the agriculture industrial commodities. So whether it's cotton used for textile is down by 28% and rubber down 28% as well in last one Samvat.
Manisha, nothing is shining like you today. Thank you very much. Thank you very much. Thank you very much for that. But let's invite the management of Nazara Technology on the show now. They too released their Q2 numbers. Q2 has seen a growth of 104% on the top line. Margins, though, have seen a drop to 5.2%. The company has gone ahead and up to the FY23 revenue guidance. They're now targeting the top line for FY23 to come in between 70 to 75% with EBITDA margins of 10%. Nitish Mittersen, the joint MD at Nazara Tech, is here with us on the show now. Nitish, morning, and thanks so much for joining in. This is Rima here. Happy Diwali to you first, to your family and everyone at Nazara Technology. Can we talk about this guidance upgrade? What prompted it, and what will be the contribution of AdTech, to this top-line growth? Because that's the new addition.
Sure. So, as you know, we have multiple, engines of growth. We operate in different business verticals. And all around, we've seen good growth opportunities this year in the first half, especially as you see in our Nodwin business, our esports business has grown well, our premium business has grown well. So we've been fortunate to get many growth opportunities. We have kind of accelerated and reinvested a lot of our margins into this growth. And that has allowed us to, I would say upgrade our earnings or our revenues from 50% earlier guidance to 70 to 75% this year. For us, the big thing is, in the verticals that we operate, especially in businesses like esports, which are nascent businesses, we are already market leaders there, and they are going to become large businesses. We really want to accelerate our dominance in these spaces, and therefore investing for scale, investing for market leadership is far more important than trying to maximize margins today. And that's exactly what we're doing. At the same time, our philosophy has always been that we will not grow by burning money. We will not grow by losing money. We will generate profits. We will generate positive cash flow. And that's how we are, executing on our end.
Right. Hi, Nitish. Good morning and thanks for joining us. This is Pavitra and happy Diwali to you and your entire team and family. You've taken us through the revenue guidance overall. Can you take us through what the individual verticals are likely to see in terms of revenue growth? If you could break it down for esports, for gamified, because gamified has also picked up after 2 quarters now.
Yes. So I think for this year, if I were to talk about the top drivers of growth, I think esports is definitely going to be a #1 driver. We have 2 companies over there, Nodwin, which does the esports tournaments, esports content, and then we have Sportskeeda that does esports and regular sports news. So both these companies are firing very well for us. We also added a gaming accessories business in the esports segment under the Wings brand, which has done extremely well during this Diwali festival season on the online marketplaces. So we are building this entire ecosystem around esports, and it's growing very well for us, and therefore it will be a strong driver for us. Now, coming to Kidopia as well as our gamified learning space, right? As we spoke many times earlier, it was impacted by the Apple privacy changes, but I think we have stabilized there. We've taken a price increase. We've stabilized our subscriber base, and you will start seeing that grow again. And thirdly, our ad tech and freemium businesses we expect will also scale very fast this year. There's a huge opportunity on the ad tech front, which we've entered. The company is doing very well. Our freemium business is small, but a huge opportunity to grow from where we are. So we have 3 or 4 growth drivers for this year. And I think, we should comfortably meet our guidance.
Hi, Nitish. Morning.
Morning.
For esports, what is the reason that you have seen this, drop in your margin despite a revenue growth?
Yeah, so, we've not really seen a drop in margins, but we have used our margins to reinvest in certain IPs and certain brands that we are, building, like gaming accessories. So, for example, the Wings brand that we have launched in the gaming accessories space, as you know, this whole Diwali season is very important. That's a peak of the whole year, and therefore, in this quarter, we've aggressively invested in creating that brand and marketing that brand. So, I would say there's a way to look at adjusted margins, but we don't like to do that. The second thing, as a company, we very rarely do any capitalization. We OPEX everything out. So the way to look at it is, we're kind of reinvesting our margins in the esports space to grow faster.
Okay. Just want to get back. I missed the number. How much will ad tech contribute? I think this quarter it was about a 35-36% quarterly revenue. Is that the run rate for the rest of the year? So should we expect 100 crore plus kind of a revenue from ad tech?
Yes, ad tech will be 100 crores plus this year.
Okay.
And will be between, I would say, 13 to 14% of our revenue. So it'll probably be a little larger than 100 crores.
Yeah, 35. Even if you do 35, it will be larger than 100 crore. Can you talk about the advertising and promotion? That's seen a pretty sharp jump. In the first half of the year itself, your advertising and promotion revenues have gone up by nearly 50%. So that's clearly made a big comeback. What's the expectation from the rest, and what's driving this?
So I think the line item you're looking at is actually advertising and promotion costs and not revenue.
Yes, costs, sorry.
Yeah, but I think 2 or 3 things are driving it. One is with Kidopia coming back into growth phase, we are now able to spend more money to acquire more users. We spent $3.1 million in this quarter at a cost per trial of $37.9, which is something very acceptable to us now, especially after the price increase we did in the last quarter. So I think that's one element. The second is, we created this Wings gaming accessories brand that we have promoted quite significantly. We are spending money building some of our IP brands. So I think a lot of the advertising and promotional costs have increased because of that. But a lot of these are creating IPs and value for us for the long term. So we are very happy spending this money.
OLX ऑटोज ही देता है आपकी कार का बेस्ट प्राइस। सुनीता, सुना तुमने ये क्या बोल रहे हैं?
यही कि OLX ऑटोज देता है आपकी कार का बेस्ट प्राइस। ये प्राइस ही नहीं, सरप्राइज है। विजिट olxautos.in।
पापा सोच रहा हूँ एक गाड़ी ले लूँ।
हाँ तो ले ले, पर सेकंड हैंड लेना, सस्ती मिल जाएगी।
सेकंड हैंड गाड़ी? अच्छी गाड़ी लो, नई गाड़ी लो, बड़ा सोचोगे तभी तो कुछ बड़ा होगा। क्यों भाई?
सच्चा दोस्त वही जो आपके बारे में सोचे। ऑटो लोन्स फ्रॉम IDBI बैंक। बैंक ऐसा, दोस्त जैसा।
Welcome back. It's picking up for the markets now 100 points higher on the Nifty as we speak. So clearly there is a big Diwali party out here. There is that festive cheer and no one wants to sulk today. So stocks are picking up in trade. But let's talk about the company which has got the apt name, Happiest Minds. They've reported a very steady second quarter, dollar revenue growth of about 5% on a quarter-on-quarter basis. Rupee revenue growth has come in at 8.1% and margins are absolutely stable on a sequential basis. We're joined by the management of the company, Joseph Anantharaju, Executive Vice Chairman and CEO, and Venkatraman Narayanan, MD and CFO of the company. Gentlemen, morning, Reema here, and happy Diwali to both of you. Venkat, first question is, growth has been solid in the first half of the year. You're tracking a revenue growth of more than 25%. So you look comfortable to meet your FY23 revenue guidance of 25%. But there are two verticals. One of them is retail and the other one is industrial, where you've seen some softness in growth, negative growth on a quarter-on-quarter basis. Can you tell us what's happening for you in these two verticals? What went wrong?
Thanks for that, Rima. Happy Diwali to you and all of CNBC-TV18. Yes, you're absolutely right. Great performance, great quarter, both on the revenue growth, volume growth, and margins front. As far as when you dig into the results a little bit and look at the vertical split, retail has shown a slight drop. We did talk about some sort of a softness in retail and in the markets of Europe for us. That was in the last call as well. But the drop this quarter has been primarily because of completion of certain projects, if you look at it that way, especially in the industrial vertical. Otherwise, all other verticals have grown, secular growth, both absolute and in percentage terms.
So retail is weak because of certain slowness in the European clients, and industrial is because of completion of projects and new projects have not ramped up. Is that correct?
That's right.
And this will persist?
In retail also, we had completion of a project.
Okay.
And hopefully we'll have additional projects coming in from the same client. But industrial was really on account of completion of a project.
In Q3, will there be any verticals where you're a bit worried about growth?
Not right now. Looking at the market sentiment and how Joseph, Rajiv, and other BU heads have really reached out to the market, they are seeing a positive trend, especially for digital. And like we have been saying, digital has become an imperative, so it's not really discretionary to that extent. So even though there is macroeconomic concerns and there is softness in the overall economy, with respect to IT spend and within that digital, we are not at least seeing signs right now. And we are being cautiously optimistic because, things can change. And to that extent, being prepared for it is always good.
All right, gentlemen, good morning and thanks for joining us. This is Pavitra. And, so you mentioned that you're not seeing any kind of, or for now, you're not worried about growth from any of the verticals in Q3. Mr. Anantharaju, if I can come to you now, what would this mean for your revenue then for the full year? And if you have any kind of guidance that you can tell us, it's around 5% this quarter. So can you tell us what it will mean for the full year, since you're saying that, you're not expecting any kind of pain in these individual verticals?
So I think we would like to hold the guidance that we have provided in the previous call, when we spoke of 25% for the year. We feel quite confident that we will be able to achieve those numbers, given what Venkat was just mentioning, that we do see a little bit of sales cycle elongation in Europe, just given the current conditions, both on the political and on the economic front. But otherwise, the US and ANZ, India markets continue to remain strong in terms of demand for digital tech. So we're going to hold our guidance that we had provided last quarter.
Okay, morning, gentlemen. Venkat, wanted to check with you. You have raised about 1,400 crores. Can you take us through what is the plan for utilization?
Hi. We've not yet raised. That was an enabling resolution that was passed at a recent board meeting on October 5th. We have now reached out to our shareholders for confirmation and approval through a postal ballot process. So that's what's on right now, and you would have read about it in the press and through our exchange filings. The next step is obviously to get that approved. The board denominated committee will take it to the next step. Essentially, this money has been raised for growth through inorganic means, acquisition. So we are building up a certain amount of money, or a war chest, as you can call it, to execute on that growth objective.
So what's the kind of war chest you're looking to accumulate? And could you give us some indication of potential acquisitions, the targets? Can it close in FY23?
FY23, there is none as of now. And if it was there, we would have had to go public. And we would like to hold on that front. With regard to the amount of cash, we have about 600 crores of cash on our books, relatively debt-free, and with about approval, in principle approval for about up to 1,400 crores. If we do raise that kind of a number, we are talking about a total war chest of about 2,000 plus crores on our books, if all goes well.
All right, Mr. Anant Raju, just one final question. If you can take us through what you expect on the margin front. And also, we have seen that while your attrition has come down, you've also added, your employee headcount has gone up quite significantly. So can you tell us what all of this is likely to spell for your margins?
Sure. We've given a margin guidance of 22 to 24%. And while we continue to do better than that, we've been 25% plus for the last 9 quarters.
Yes.
And we hope to replicate that, but we want to hold on to 22 to 24%, which is a long-term margin guidance that we provided. And as you mentioned, we've added 393 people net in Q2, of which 247 are campus graduates. And the focus in Q3 and Q4 would be to get these campus graduates trained and induct them into projects so that they can become billable and provide a little bit of cushion from a margin perspective.
Out of time, gentlemen. Thank you very much for joining in. That's happiest minds for you, maintaining the FY23 revenue guidance of 25%, margins of 22 to 24% over the medium term. For this year, it's probably tracking a lot higher at more than 25%, but over the medium term, 22 to 24%. But watch out for a potential acquisition. They're building a war chest of nearly 2,000 crore rupees. But this is, of course, in line with the company's long-term target, because they have an aspiration to hit $1 billion in revenue.
Hey guys, welcome back. You're still tuned into Trading Hour. It is the midst of the earnings season, so we have lots to talk about. Symphony is in focus. The company recorded its highest ever sales in Q2 with a 25% revenue growth, even as its margin contracted by over 400 bips. It's a 420 bips margin decline on a year-over-year basis. To discuss all of this, along with what festive demand is looking like and the export opportunity, Rupesh Shah, who's Executive Director of Corporate Affairs at Symphony, joins us now. Mr. Shah, good morning and thanks a lot for joining us. First off, a very happy Diwali from all of us here to you, your team and your family. And thank you for joining us today. If I can begin by asking about the margins exactly. We've seen a 420 bips margin decline. Can you tell us what's really going wrong over here, and what is the guidance for margins going forward? Are you likely to continue to see this kind of pain?
Thank you, and wishing you, your colleagues and all the viewers very happy Diwali. So first and foremost, as it can be seen at a console level as well as at a standalone level, for 6 months, first half gross margin and EBITDA margin is higher than previous year. Of course, in Q2 September quarter, EBITDA margin has shrunk, and mainly on account of 3 reasons. Number one, during September quarter, we have undertaken one time some of the major market research, product research activities, and that has resulted into almost 2.5% of the top line by way of off-season, those kind of expenses, but treated as revenue. Secondly, in summer of 21, there was huge unprecedented tertiary sales that has resulted into, as per accounting standard, incremental warranty provision. And number 3, in about 4 range of our air coolers, in all 20 plus SKUs, we have strengthened and upgraded those models substantially for our long-term value accretion. However, we haven't yet taken any major price increase despite cost increase because of upgradation, but that price increase will be done in a calibrated manner, and result of that will be seen in March 23 performance as well as next summer. Having said this, as far as EBITDA margin percentage is concerned, on a console level, year as a whole, we expect almost to be in line with what it was pre-COVID at a console level.
Okay, so you spoke about calibrated price increases from here on. Could you tell us the quantum that you're planning to take over the next 6 months? And what's the kind of margin range, the aspiration for, say, Q4 FY23 or Q1 of FY24?
Obviously, our margin aspiration is on a console EBITDA level, almost in line with what it was pre-COVID. But that will happen in a calibrated way because we can't have a knee-jerk reaction to optimize everything. We have already undertaken somewhat price increase across the product range, which varies from 2% to 12%, and that will keep on happening month after month and quarter after quarter. And maximum result of that will be seen in March quarter and next summer.
2 to 12% is the price hike you've already taken or you plan to take?
We have already taken price increase in the range of 2 to 12%, but in addition to that, there will be further calibrated price increase so as to reach to EBITDA margin percentage to pre-COVID optimum level by next summer.
Mr. Shah, revenue from India, the domestic market, has shot up exponentially this time. I mean, I think for H1, the first half of the year, it's come in at 63%, but it used to be closer to 50%, right, earlier. So is it that the Indian market has done exceedingly well, or is it that, globally you're seeing maybe some sort of headwinds in other geographies?
You are absolutely right. So Indian market has done extremely well. We are completely out of the woods of 2 bad years of COVID, and this has been highest ever first half and quarterly top line. As far as rest of the world is concerned, it is almost flattish, and we expect, considering very robust off-season collection, that momentum to continue. And we are really witnessing that across the geography, across the models, and across our various business verticals.
Welcome back. The market is holding steady. It's an 80-point gain that we are seeing on the Nifty, but the real strength is really in the Nifty Bank, which just continues to move higher. It's 650 points higher on the Nifty Bank, led by the likes of Axis, Kotak, and ICICI Bank. So Axis right now is almost 6% in the green. That is the kind of strength that we're seeing in the banking pack. But with that, we're going to wind down on this edition of Trading Hour. From the entire team, thank you for watching. And you guys stay tuned because Halftime Report comes up next.